Most people think an investment portfolio is about picking the right stock. That's why they lose money. A real portfolio is not about one idea, it's about structure. If all your money is in one place, you don't have a portfolio, you have a bet. Today I'll show you the three parts every serious investment portfolio must have. One that protects you, one that builds wealth, and one that accelerates growth. Miss at least one of these three parts and sooner or later the whole structure collapses. I'm Ravi Gabis and welcome back to the Gabis Show, where we unlock the secrets of real wealth in the United States every single day. So I want to give you the structure of the portfolio. We have already started talking about investments. First of all, you need to have money to invest. And then investment is not usually about getting money in a short period of time, multiplying your capital several times. No, investment is about long-term game, how to become rich. I call it in a guaranteed way, if we even can use this word towards investments. But let's go. There are three parts. Option A. Option A is about certainty, security, and guaranteed outcome. This part of the portfolio that is designed to guarantee a specific amount of money by a specific period of time. You literally define the goal yourself. I say, by the age of 65, I will have this amount of money. And then you use specific tools that are built to deliver that result. And one of the best tools for this part of the portfolio is insurance, but not ordinary one. I call it saving based or accumulative life insurance, because what it has, you kind of create money in 15 years or 20 years, depending on your plan. It creates some kind of discipline. You will have to pay every single month or once a year. Then it protects you if something happens. It's very good. If something really serious happens to you, it protects your family. So they will get your money. But if nothing happens to you, you have a guarantee. You kind of guarantee the outcome if you follow the plan. You will get your money back. This part is not about getting rich fast. It's about making sure that you're never poor. It's the first step. And the portfolio is created step by step. You create this part and then you move forward. You create option B. This part is about capital growth and financial freedom. This is where you build wealth over a long time, 15 years, 20 years, investment funds, stocks, real estate, and other instruments with compound. The purpose of this part is financial freedom. It's not guaranteed like option A, but over a long period of time, 10, 15, even more years, it gives you a serious upside, and it's pretty difficult to lose your capital using these tools. This is the engine of your portfolio. This is the axis. And when you created these two parts, option A and option B, you can move forward. You can go to option C. It's about aggressive growth. Option C is where you take high risks in exchange for potentially high returns. Speculative instruments, startups, crypto, leverage, high volatility assets, forex. This part can grow fast, but at the same time, you can also fail fast. That's why it should always be limited, and I do not recommend to invest more than 20% of your portfolio into this part. The biggest mistake people make, they come to me and say, Ravi, I have $1,000, teach me, give me investment tools, how to make 50,000 in 6 months and 100,000 in 1 year. And then I will go into insurance, I will create option A, option B, but it doesn't work in that way. Why? Because 99% that you will lose your money if you're trying to make 50,000 out of 1,000. It means you need to multiply your money 50 times in 6 months or 100 times in 1 year. So it's just crazy. It's very risky. It's something very, very risky. Even if you succeed, there is a trap. Maybe the most important part is a trap that if you manage to make 50,000 out of 1,000, then why should you go into insurance and just save your money? Why should you go into real estate getting that 5-10% return? Why should you go into stock market to get average return of 10%? Why? You can multiply your money, and of course you will not. You would stay there, and finally you will lose all your money. I want to give you an example. Maybe it's COVID time. It started during the COVID. I shot a lot of videos that time for my YouTube channel. It was back in Russia. My video operator, he was a very creative guy. And during the COVID, a lot of scams showed up on the market. Tens. And people started investing there, getting 30% return a month. It's just crazy. Could you imagine that? 30% a month. And people started thinking in categories of getting 10% a month, 20% a month. So if you get 10%, it's kind of conservative, they thought. If you get 30%, it's good. Yeah, you shouldn't go below 30% a month. Can you imagine that? And it was okay for 3 years. Yeah, around 3 years it was okay. Okay, 2022, the middle of 2022 was kind of the peak when it collapsed. But before that, it was just crazy. And my cameraman decided that he doesn't want to waste his time shooting videos, and he dived deep into that scam business. And he found a way. He was really successful. How? He realized what's the problem with scams. It's not my area. I don't invest in scams, but he figured out how it works, and he built a team, and he was pretty successful for some short period of time. The main problem with scams, he says, he used to say, let's say, people try it first. So they take small amount of money, they invest it there, they get return, then they increase it a bit, they get high return again, and then they kind of understand it works, it really works. They sell the houses, they get loans, and they put all the money there. And in a couple of months, it's collapsed. They lose everything. So he understood that, and they created a strategy. When new scam appears on the market, they take all the money they have, they put it there, and in a couple of months, they take everything back. And by the time it's collapsed, they already took back their money. So, and it really worked for a while. His income increased up to $20,000-$30,000 a month. All his body became covered with tattoos. So he became kind of serious guy with white hair. He was like me before. Very stylish man. He had a huge team of supporters, kind of, multi-level marketing in scams. They usually promote themselves in that way. But one day, what happened? He learned to diversify his risks. One day, they decided to play really big. They took all the money they had, and they entered 4 new scams simultaneously. They met with the creators, so it was a very serious approach. They entered to all those tools simultaneously, but in a couple of weeks, all these tools collapsed. They lost everything they had, every damn thing they had. And that was the end of the story. Now he shoots video again. We work with him together. Again, we create videos for YouTube. He's a really creative guy, but this is a trap. That's why if you believe that you will start with aggressive part of the portfolio and then you will move to insurance option A, you will go into long-term investments, it doesn't work in that way. Psychologically, it doesn't work. That's why do it correctly from the very beginning and all be good. Good luck. See you tomorrow.